UnitedHealth Group stock, ticker symbol UNH. This stock is up almost 4% on the year-to-date chart, underperforming the SP500. But they recently released earnings and the stock went up roughly 14% afterwards. EPS was reported at $6.8 and revenue is coming in at $98.9 billion. Both numbers beat the analysis estimates. And people love UNH stocks because of multiple reasons, one of the main things being the dividend. And I understand why, with dividend yield at 1.5%, which is a decent number. And look at that 5-year growth rate of 15%. If we look at the past 5 years, we see that UNH easily outperforms the S&P 500 by roughly 37%. And this is including dividends. So could this be the perfect time to buy UNH stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does UNH do? UnitedHealth Group is one of the largest private health insurers, providing medical benefits to more than 50 million members globally, including 5 million outside the States. Diving into the earnings, we see that revenue was reported at $98.9 billion and grew nearly $6 billion year over year, driven by Optum. Consumers grew by 2.3 million year to date, which is also quite impressive. The total cyber attack impact in the second quarter was $0.92 per share, including the $0.64 per share to support direct response. For the full year, the company expects estimations of $1.9 to $2 impact per share. And in total, UnitedHealth Group reported a revenue of $98.9 billion, with an earnings from operations of $7.9 billion or $8.7 billion adjusted, resulting in a net margin of 4.3% and 6% adjusted. The cyber attack had an impact of $1.1 billion. The biggest segment, United Healthcare, reported revenue of $73.9 billion, up from $70 billion last year. However, operating margin is decreasing even with adjusted numbers here, but it is recovering from December, which is the positive part. Optum reported revenue at almost $63 billion, up from $56 billion. Operating margin went down year over year, but the adjusted numbers look pretty solid. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. UNH is a 517 billion market cap company. PE ratio is at 34, indicating you pay a premium for the stock right now. Later in this video I will show you my 3 price targets for UNH stock, so make sure to watch until the end. And in the meantime, please let me know your thoughts on UnitedHealth Group. Revenue is at 380 billion and in this graph we see that revenue went up in the long run. And this is one of the reasons why I like this company so much. It is growing really steady and consistent. However, most recently revenue is slowing down a bit here. Margins are going up and down in the past decade, but in the past couple of years there was an upward trend. However, net margins are going down lately, so this is something to keep your eye on. EPS is pretty much the same story as the revenue. And margins, it is growing really steady and consistent, but it is slowing down a little bit here. Analysis expect that EPS is growing really nice and steady in the coming years, all the way up to $46 per share. On average, you're looking at 30% growth. To me, this looks really good. For the revenue analysis, I expect pretty much the same. The only difference is that growth numbers are a little bit lower with 8% growth per year on average. Return on assets is sitting at 5.5%, which is a decent number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at roughly 14%, which is a great number. It is also slightly higher versus the 5-year average, which is very nice. Current ratio is at 0.3, which is a little bit of a diluting number here. It looks pretty steady historically, which is the part I'm focusing on. I expect this number to return back to 0.8 anytime soon. Right now, UNH has 75 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. UNH has 31 billion in total cash, so they can pay down a big chunk of their debt. To me, this is a really good sign, and also one of the main reasons why I like this company so much. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, at a really steady and consistent pace, so this comforts me a lot. Shares outstanding are decreasing in the long run, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.5%, which is a decent number. I would love to see a higher number, but it is still looking pretty good. Annual payout is at $8.4 and payout ratio is at only 29%. I prefer 50% or lower. So right now they have 71% left in cash to buy back shares, pay down debt, do acquisitions and all other things. And now it gets really interesting. The 5-year growth rate is at almost 16%, which is an insane number. They have increased the dividends for 14 years in a row, which is also pretty impressive. If you take a look at these numbers, the dividends paid since 2014, you see that UNH did increase the dividends at a high pace. However, most recently growth is slowing down a little bit here. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that historically it looked really good in a range of 20 to 30%. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is as expected to increase at the same rate as the past couple of years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare UnitedHealth Group stock with the overall market, in this case the S&P 500. Next to that I added ELV and HUM, two of the competitors of UNH. On the 5-year chart we see that UNH stock did beat all the stocks in this list by a decent amount. In total, UNH returned 137% including dividends. Both ELV and HUM underperformed the S&P 500. On the 1-year chart things look pretty interesting. The S&P 500 did beat all stocks in this list by a significant amount. In total, the S&P 500 returned 22%, while UNH was sitting at 14%, and again beating the other two in this list. On the 6-month chart, it is again looking interesting, because both the S&P 500 and UNH had a significant higher return versus the other two companies in this list. But again, the S&P 500 wins. On the 1-month chart, it is UNH crossing everyone in this list with a massive 17% return, which is of course related to the earnings. Bottom line, UNH did beat the S&P 500 and two close competitors in the long run. But also in the short run it seems they found some momentum. So could this be the perfect time to buy UNH stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. Starting off with revenue growth. For the revenue growth, I'm filling in 10, 11 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 4, 4.5 and 5%. For the free cash flow margin, I'm putting in 4, 5 and 6. For the PE ratio, I'm putting in 20, 22 and 24. For the price of free cash flow, I'm putting in the same numbers. It is one of the bigger companies out there that is still capable of growing at a high pace. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, UNH stock is at $560. I hit analyze, and we see a few green numbers. We have a low price target of $395. We have a mid-price target of $512 to $569, and we have a high price target of $653 to $784. To me, the mid-price target is the most justified here, telling me that this stock is in the fair valuation range. Which price target do you think is the most justified? Let me know in the comments down below. My final conclusion is that I have a choice to make with this stock. Since the most recent increase in stock price, it became my biggest stock in my portfolio right after the S&P 500. For now, I think the stock isn't overvalued, but it is sitting at the peak of my price target range for now. So I'm going to think about potentially selling this stock to make some profits and put it in a different stock. Most fundamentals look really good, and I really like the fact that they surprise most investors by delivering these results. However, the growth in revenue and margins is slowing down lately. From a dividend point of view, I also get excited. Dividend yield is pretty decent and growth numbers are looking really good. Yet, the growth is slowing down as well here. From a value point of view, things also look pretty interesting. I think the stock is fairly valued right now with almost no upward potential. And as said a minute ago, I'm going to think about selling this stock. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. Not a financial advisor, and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.